Welcome to Bears in Exile. Today is August 13th, and it is time for the weekend market overview. We'll be looking at the Dow, SPX, VIX, XOI, TNA, UUP, FXE, GLD, and SLV. And here we are. We had another update on Friday, 125 points, almost 126, and yeah, not too shabby. We have plenty to examine tonight. And so the big news for me is the real body of the candle did close above the real bodies of the previous three candles, and that's fantastic. It didn't make it to the fourth, but that's okay. This is enough for me for the moment. And what else do we have? Well, we can see that it appears to be attempting a try at a bubble corrective move, and we have two upticks. One of them is about to expire, and it's up there at 11,800, and so it's unlikely that that one is going to pan out. The down momentum is just too great, but you never know. And then we have the second uptick, giving us a little bit of an updated price target, which is up here right about 11,550, and that one seems extremely reasonable to me, and maybe we will get that in time to fulfill its time target, which we still have 2 more days, so that'll be nice if it does. CCI ticking up, stochastic ticking up. Aha, finally. RSI 14-day moving average, finally just below the oversold line. Perfect. I definitely like that, and it's kind of a big deal. RSI itself ticking up, barely getting above the oversold level. MACD histogram continuing to climb, and the MACD itself, we finally get a little bit of a hookup. Excellent. So while it certainly all looks positive, of course, we still have the momentum that we're dealing with to the downside. Has it completely abated? Well, probably not, but it does appear to be trying to deal with it. So while we can continue to go down, we certainly have some indications that say that it should be going up. In addition to that, I'm going to look at black box number 2, just for a different take on it. This one is optimized for shorter period time frames, and as you can see, the move down was so extreme that it exceeded the minor trend, exceeded the major trend, and we had a reaction from that. We have now exited the minor trend, and it looks like we could be going up for a test of the upper trend, which is about 11,550. That also makes sense. That coincides with our uptick. Our latest uptick anyway. So the question will be, does the minor trend slope up to go and meet the major trend? Well, that's what we're going to be watching for, and certainly everything is still pointed down, so that's not a good sign, so something to be aware of. SPX, more positive than the Dow. We did get above the previous 3 real body candles. Fantastic. Still have that uptick. It's going up here to about 1220. And CCI ticking up. Stochastic ticking up. 14-day RSI moving average. Getting good into the oversold area. RSI itself, a hair above the oversold area. We do have the hook up on the MACD. Histogram still ticking up. This looks nice. Black box number 2, same thing as the Dow. Exited the minor trend, exited the major trend on the way down. Have now exited the minor trend on the way up, and the major trend is way up here around 1250. And so getting to 1220 roundabout shouldn't be that big a deal, but if we start slowing down and we only have 10-point move days, then maybe it will take a few days to get there. as long as we don't have any nasty NDEs over the weekend. And certainly we could. You also notice that the candle is almost an inverse hammer. I guess technically it is. It's a little tiny one, so I wouldn't read into that too much yet. The VIX, on the other hand, we do have a proper hammer. It is. It's not at the top of the range. It's in the vicinity of the top of a possible range, but we do have the down tick, and we're waiting for that to resolve itself. Hopefully it will. And CCI ticking down, stochastic ticking down. 14-day RSI moving average very high, ready to slope over should it choose. RSI itself ticking down. MACD ticking down. Histogram ticking down. This does look nice. Black box number 2. You can see that we did exit the minor and the major trends a few days ago. We've now come back and almost tagged the bottom of the minor trend, and then you see the major trend is way down here, about just under 19. So along with the price consensus levels and all that. So very curious to see if volatility, craps out and everybody gets calm, and this just falls apart, which it normally does when it gets to really high levels. But we have to wait and see, unfortunately. XOI, not quite an inverse hammer. We do have the uptick. CCI ticking up, stochastic ticking up. 14-day RSI moving average in the oversold zone. It can stay there for a while. RSI still below the 30, still oversold, and MACD not hooking up yet. MACD histogram ticking up. TNA, this one's just kind of lagging. And we have a very small, hammery, spinning top looking candle. Not really pretty. We still have the uptick with a target around about 56. CCI ticking up, stochastic ticking up. RSI 14-day moving average way in the oversold area. RSI itself still in the oversold area. Do not have the uptick on the MACD. Histogram though, we do. Looking at the black box number 2 on this one, you can see that it did exit the major and the minor trends a few days ago. We have left the minor trend to the upside, and we have the major trend up here at about 54. So it does make sense to go up here. Now with this, we should always be cognizant of, if things turn out to be bad, if we have an NDE over the weekend, and these are all still sloping down. There's no guarantee that it's going to go up and test the upper trend line. Normally when you violate one of them, especially the minor, you test the upside of the minor, which we have done and exited it, but it has not been pushed back up to where it is sloping back up yet. So if something bad happens, I mean, this is showing a down target around about 31. So and that is similar for the Dow and the SPX. I mean, it met one target, which wasn't far away, and if something bad happens, it can continue on inside that channel until the channel changes. But I do like the idea of it going up to test the major upper channel line. Okay, I need to switch this back. And UUP. Green candle today. Probably why it didn't move 400 points, which we have become accustomed to. And CCI ticking down, stochastic ticking up. RSI 14-day moving average actually getting an uptick today. RSI itself getting a slight uptick today, along with the MACD and the MACD histogram. So, these short-term moving averages look way ugly as they hang out right under the bearish bar, and until they lose strength, I guess they can just sit there and kind of whittle away at the bar So not too much to be said, not too much to be gleaned from this. This is a mixed bag. And looking at its sister, FXE, now this one is more interesting. We have a hammer, and we have almost a perfect double flatline. So this little wavy looking structure that we have is now just petering out into a flatline. We don't like double flatlines. CCI ticking up, stochastic ticking down, RSI 14A moving average flat, RSI itself trying to get to the 50 neutral, uptick on the histogram, and not quite across on the MACD. So not much to be gleaned here either. Mixed bag, and double flatlines, we do not like those. Shows that a move of some sort is coming. So hopefully we'll be on the right side of that when it finally shows up. GLD, our second VIX. We have a hammer, and we have the downtick. Downtick showing an area around about 165. CCI still ticking down. Stochastic ticking down. RSI 14-day moving average very, very high, but not ticking down yet. RSI itself ticking down, still in the overbought area. MACD histogram ticking down. MACD itself not getting the hook yet. A lot of people just love gold, and for good reason, and they're going to need a reason to get out of it. So we shall see if that happens. SLV, nice green bar. Has little tiny shadows at the top and the bottom, but really not significant whatsoever. CCI ticking up, stochastic ticking up, RSI 14-day moving average still ticking down, RSI itself being neutral sideways, uptick on the MACD histogram, and not a crossover on the MACD itself. So in this NDE rich environment, we're just waiting for the next shoe to drop, and if it doesn't, then great, maybe that's a reason to rally unto its own. But if that other shoe does drop, man, it's going to be ugly, and so we are just waiting. Everyone's hedging their bets, and there isn't much to say beyond that. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you very much.